Sound of Money with Santosh Sirur.
Hello and welcome to another super special episode of The Sound of Money from the season 3. And I have an amazing guest joining me from Mumbai. He is Mr. Prasad Ajinkya. He is the director at Homeville. He is in fact director for technology and he's one of the co-founders. And what brings him into this very special episode, which is a collab with Finternet, is he's one of those key, and I would also say a pioneer from the home credit industry that's getting on into the Finternet and making a huge contribution. So first, let's welcome Prasad onto the show. Hi, Prasad, and welcome to The Sound of Money.
Thanks. Hi, Santosh. Thanks for inviting me on this podcast.
Most welcome, and thanks for accepting the invite, Prasad. So Prasad, the first question is, Homeville is essentially, in what I understand, is into home finance, home loans, mortgage. How does that bring Finternet into, how do these two terms marry each other? Maybe if you can start there.
So we started Homeville with the idea that access to credit for secured products should be made available for everyone, and it should be made available at a cheaper cost.
Yeah.
One of our thesis has always been that credit is essentially a commodity, and therefore access to credit should be available for everyone at different costings, right?
Yeah.
And therefore we have been creating different platforms which are designed to accelerate the rate at which credit is disbursed to tier 3, tier 4 cities, right? We've been focusing on the housing sector because we believe that housing is a major, force in building the nation, right?
Yeah.
If you see the contribution of GDP of India that the housing contributes to, right?
Yeah.
It is not more than 10 to 13%, right?
Yeah.
But if you look at developed countries, if you look at a country like United States, around 50% of the GDP is housing. Okay.
Yeah.
In fact, they have a significant chunk of their time during budget on housing itself, right?
Yeah.
We strongly believe that if we are able to provide access to credit for everyone, then housing can be a big force in building the country going forward. And therefore, all of us have been focused on making cost of credit for home loans, for LAP, for any kind of secured products cheaper for the end user, right? Keeping that in mind, one of the first products that we launched was Home Capital, which was essentially a down payment assistance program for prime mortgages. Generally, when you are buying a home in tier 1 cities, right, the amount of money required for down payment is pretty high, right? So we've created a subvented product there, and that went well. It ran for some 7 to 8 years, right? And back then we did not have a NBFC license, and we were operating as a fintech. However, as we started partnering with multiple lenders, and we started realizing how a digital lending flow can radically increase the volumes. We realized that it is high time that we also start applying for a license and become a lender ourselves, right? We got our license in 2019, and we have been focused on housing ever since. During that time, I actually remember this one project that was in Palghar, and we had approved some 100 cases for users who would buy their homes, and we were pretty happy that in one project our monthly target was kind of getting done, right? And none of those 100 cases actually came forward for taking the funds. So we went back to the developer and we spoke with them that, hey, why have these guys not taken the loan? So the developer said that they were not able to find an affordable home loan which was really affordable for them.
In that sense,
right? And when we started finding out about what are the kind of affordable home loan rates we were shocked because your prime mortgage rate is what, around 7.4 to 8%,
Yeah.
right? But in affordable space, the rate shoots up drastically. It goes to 14, 15,
Wow.
16, 18, 20% as well.
Hmm.
And that is where people struggle. Now, this is interestingly a conundrum that people who are not able to afford higher EMIs, right? They are in fact charged a much higher interest.
Yeah.
And that's where we started studying the affordable housing space.
Hmm.
And there we realized that there are some 80 to 85 odd housing finance companies
Yeah.
who are operating in this space,
Hmm.
right? If you leave the top five who have managed to, get into the middle tier,
Yeah.
uh, the rest of them are struggling with liquidity issues,
Hmm.
right?
Yeah.
Their cost of funds is extremely high,
Yeah.
and they are always trying to figure a way out of how to uh, get out of an ALM mismatch problem, right?
Hmm.
Asset liability.
Yeah.
The funds that they have to pay for their own onward lending loans
Hmm.
is much higher than what they are getting as EMIs because it's a long tenure product,
Hmm. Yeah.
right? And therefore we realize that this is a space that we have to work with to reduce the cost of capital in the affordable housing space.
Yeah.
So we essentially started speaking with four or five different housing finance companies, and we realized that co-lending, which was relatively new back then, this was
Hmm.
2020,
Hmm. Yeah.
right? And the co-lending guidelines had just come, and we thought that let's do one thing, let's become the senior lender and start working with these housing finance companies.
Yeah.
We subsequently built out the tech, which is now known as Bharat Housing Network,
Hmm.
and started working with multiple housing finance companies. By the end of the year, we had partnered with 30 odd housing finance companies, and we were able to scale our own AUM from literally 0 to 100 crores.
Wow. Okay.
And this was without opening up any branches. This
Hmm.
was with near zero capex,
Hmm.
right? Uh, and there we started seeing the impact that if you have a senior lender who is willing to, participate in the same loan,
Yeah.
then you can suddenly start, releasing liquidity
Yeah.
into the
Okay.
ecosystem.
Yeah.
And that's where we started getting more and more invites for partnerships, etc. So
Hmm.
today we have around 53 odd HFCs and NBFCs working with us.
Hmm.
And we have started scaling up our own AUM. But
Hmm.
at the same time, we showcase this as a solution to larger FIs,
Yeah.
right? And we onboarded two large FIs in the country who have been using the platform for their own co-lending operations.
Interesting. Hmm.
Incidentally, one of the Spocks at those FIs, he ended up switching over to Finternet,
Okay.
right?
Interesting.
That's Sanmesh,
Yeah.
right? And because we were speaking on a daily basis, we realized that this is something which can drastically change and help smaller HFCs and NBFCs.
Hmm.
Because how do you raise funds as a housing finance company who is not in the who does not have a large enough AUM?
Yeah.
You typically have, let's say, a 200 crores or a 300 crore AUM. A
Hmm.
bank will not entertain you,
Agree. Yeah.
right? A
Yeah.
bank will say, I'll give you a loan, and that is a fairly short tenure loan, right?
Hmm.
You end up taking a lot of loans, you end up getting into an ALM mismatch.
Yeah.
So, effectively, if you want to partner with larger FIs, it becomes very, very difficult,
Hmm.
right? One of the way out of this cash flow problem is that you typically start selling off your portfolio,
Yeah. To
right?
manage the
We
ALM.
faced these Correct, to manage
Hmm.
the ALM, right? If
Hmm.
you want liquidity, either you raise more debt or you raise more equity or you start selling your portfolio, right?
Yeah.
And it is a interesting act of balance because you want to increase your AUM because you want a higher credit rating, right? At a certain loan exposure, you typically want a better credit rating. Now, the credit rating company says that you want to get into a higher AUM. So it's a chicken and egg
Balancing
kind of
act. Yeah,
problems.
agree. Yeah,
Correct.
yeah. But what's the
And
kind of ticket size we talk of when you say, the short loans that you talk about, especially affordable housing, typically?
so we're talking about 10 to 15 lakhs,
Yeah.
right?
Okay. So you are addressing
And
a
this,
mass out there, right? That's very, very important. Yeah.
yes, yes. So we are addressing the Bharat
The Bharat and not the
of
India. Absolutely.
and not the India,
Where,
right?
where, where the demand is essential and the support is more importantly essential, right?
Correct, right. Because traditionally, if you see how a lender is grows, he typically a lender will open up a branch. He will hire his sales staff, right?
Yeah.
And then they will start sourcing cases around that branch.
Hmm.
Uh, but if you look at the size of the country, I mean, there is uh, you can't possibly have one lender expanding to all the branches.
Yeah.
You are a bank and you have the kind of distribution, or you have to build some kind of a network which can be leveraged
Hmm.
for one FI to work through that network.
Hmm.
So we have always been pro this that build out the networks and technology,
Hmm.
and eventually commerce will come
Come
out
out.
of this,
Correct. Yeah.
right?
Yeah.
And that's where we have been focusing on building a series of lending partnerships. We've
Hmm.
always focused on alliances as one of our key drivers.
Hmm. Okay.
And therefore, now, because of our 50 odd partners,
Hmm.
we are present across 26 states
Wonderful. Hmm.
and we are able to address customers in tier 3, tier 4 cities, places where my team may not even have heard of, right?
Hmm. Hmm.
And because now the partners branch is there and they have feet on street in
Yeah.
that space, right?
Hmm.
That understanding slowly trickles up towards us, and we are able to generate a better view of this entire transaction.
Yeah. So how does this technology come into this? Especially, it's a mass market, so scaling up is extremely important, and which is what you've done by reaching to these 26 plus tier 2, 3 towns. So how has technology helped, and then how does it link it to the Finternet, and what's the game plan ahead?
Okay. So what we have built is a platform where a smaller NBFC or a smaller HFC can sign up.
Hmm.
They can log in their cases,
Yeah.
right? And a senior lender, such as
Hmm.
us or any of the other lenders,
Hmm.
can participate in that loan. It's not a marketplace.
Yeah.
The arrangement has to be done upfront.
Hmm.
The co-lending CLM2 arrangement
Hmm.
has to be done and agreement has to be done. Escrow accounts have to be set up.
Hmm.
That takes a bit of a time.
Yeah.
But once that agreement is in place, then uh, the lender's branch officials typically will add cases on the platform.
Yeah.
The senior lenders team will evaluate the case. They will parallelly assess the case and approve the case,
Hmm.
right? And then the platform takes care of the escrow account management, the payment, the payouts. For every transaction, there are three different transactions. One is what goes to the customer,
Yeah.
and the other is what the both the lenders are
Hmm.
also paying,
Yeah.
right? So that part of the heavy lifting is what we have kind of built and automated,
Hmm.
right? Uh, so just to give you an idea, Santosh, repayment schedule is something that everybody knows about, right?
Yeah.
But if you think about what are the kind of conventions that different companies follow,
Hmm.
somebody can do ki I want to do a 30 by 360 kind of interest accrual. Somebody
Hmm.
can say I want to do a 1 by 365, so per day. Somebody can say that I also want to take leap years into account.
Hmm. Yeah.
Right? So actual by actual.
Hmm.
And if you start adding up those use cases, we found that especially with respect to co-lending, there are some 1200 different use cases of just generating the repayment schedule.
Mhm.
And
Yeah.
this we have been developing over a period of 3.5 years now.
Mm.
And we realized that although it seems trivial that it's just a repayment schedule, because
Yeah.
typically lenders generate this in Excel and are able to provide this to the customer.
Yeah.
But the minute you start having two different lenders, then who gets what,
Mm.
and it becomes extremely tedious.
Mm.
Reconciliation of those payments, that also is another tedious process. Usually, what we have seen is the minute you start hitting an AU of around 1,000 crores,
Mm.
that is where you will see discrepancies creeping into your portfolio. You
Yeah.
will see a 5 bips or a 10 bips
Mm.
loss that you're doing every month.
Yeah.
That adds up at that kind of AUM,
Mm. Okay.
right?
Yeah.
And therefore, we built out the tech that will automate this and take care of these problems.
Mm.
And therefore, our portfolio has been fairly sorted that way, because we do reconciliations using tech, we do payouts using tech,
Yeah.
escrow management is done via tech, and that's what we've been building with Bharat Housing Network,
Wonderful.
right?
And that's
With
is that what with Bharat Housing Network are these use cases been now? How have you all migrating, if I use that's the right word, to test out the how the Finternet age will evolve? How would that happen?
Okay, so one of the things that we saw with Finternet is that if I wanted to, plug in to uh, create a capital source for my lending partners, right?
Hmm. Yeah.
Or for myself as well, then essentially I have to do two things. I have to find a way of packaging my portfolio
Hmm.
into a pool
Yeah.
and sell that pool with legit data,
Hmm.
right? Data which is verified and data that can be trusted. And second, every time I'm doing payment reconciliations, that has to be automated.
Yeah. Hmm.
Okay. So with Finternet, what we saw as a benefit was these two things, that smart contracts can be used to automate payouts
Hmm.
and payment reconciliations. At the same time, data exchange between two different partners can be standardized, and it can be shared without exposing data across public networks,
Okay.
right?
That's important.
I'll give you examples of how this happens.
Hmm.
Currently, if you see direct assignment transactions, if they are happening, right?
Hmm.
The junior lender who is originating the cases, who wants to sell his pool, he will typically create an Excel sheet, and he will send this Excel sheet over email.
Hmm.
This Excel sheet can contain the loan amount, the KYC information, the repayment information, and I mean, it's scary. I mean,
Yeah. Data
you should not.
data confidentiality at its out of
Correct.
the window.
Yeah, it's out of the window. Data leakage prevention is, it's just right. And the first time we did this, I was worried. I was worried sick. I think for 3 or 4 nights I did not sleep
Sleep.
properly, because I was worried that how can this transaction happen? How is
Yeah.
this data changed? In the end, what we did was we invited the senior lenders credit team to sit in our office
Mhm.
and said that, look, we will not share this data. You come, I will personally sit with you and I will share the data on my machine.
Yeah.
I am not sending any data to you.
Yeah.
Thankfully, Thankfully, the senior lender was kind enough to understand that. Most senior lenders will just say no, right?
Yeah.
But thankfully, the transaction went through, and therefore, we realized that this is one major gap. Every time
Mm.
you do a new partnership
Yeah.
where you are sending your data to a different lender,
Mm.
there is a entire understanding that has to be developed,
Yeah.
right? And that takes a lot of time. It takes a lot of time. It takes a lot of energy, right? As a junior lender, you want capital, and therefore you are strapped for cash.
Yeah.
You are running on a clock, right?
Mm.
You want the transaction to go fast, right?
Mm.
But the senior lender will always say, "Ki, let me verify everything, let me check everything," right? large direct assignments or securitization deals will take more time. Okay. And a lot of times the senior lender will do sampling. They will not even check the entire data.
Yeah.
Right. This is where we thought that standardizing the data format and making it available over the Finternet chain would make sense.
Okay.
Okay. And that was how we started speaking with the Finternet team, and then we started developing the first POC, right? And that was where we started developing it. So the first cut that we in fact showcased at GFF was a pool that we had recently done, and all the data that was there on that pool was shared on the Finternet.
Wonderful. So there are these concepts, right? In when you talk of Finternet and especially advanced tech, one of them is tokenization. So what exactly is that? If you could break down for us.
Okay. So tokenization is basically converting the rights to an asset,
Yeah.
right, into a digital form, right, that can be stored on a blockchain or a similar infrastructure, right? Basically, what I've done is my right to a physical asset or a logical asset, I'm converting and storing digitally on a format which cannot be changed or tampered with,
Okay.
right?
Yeah.
And that represents my ownership or access to that real world asset. It could be loan repayments, it could be cash flows, it could be land, it could be other securities like bonds, or it could be invoices, right? It could be anything which is
anything in digital format is something. So does that also, Prasad, lead to a faster turnaround time? Because I'm sure in home loan space, that's what is another very challenging problem and
correct.
issue on hand.
So, so traditionally, if you see a home loan journey, right? I mean, 1 month is something that is accepted and it's a norm, right? I mean, we see in the developed countries, US, UK, typically you are able to finish the entire journey within minutes and within hours you have the funds, right? That's not the case in India. You, I mean, if you want to push things, you still require a couple of weeks, if not more, right? And the reason for that is that the data that is made available to the lender, right? All of the data has to be verified, and that is what is taking time, right? Saving all of this data in a verifiable, trustworthy infrastructure will definitely help in cutting down the entire timeline for the lender, right? One of the things that I wanted to highlight with what the Finternet team is building is that they're building it in the spirit of digital public infrastructure, right? That team is already solved for identity with Aadhaar. They've solved for payments with UPI, right? Uh, Similarly, access to verifiable assets is something that can really help in this space. Because you can create a very slick home loan journey. You can create an app, but even today, when you want to see and verify the property, you actually have to send a person there.
Correct.
He will
Physical
go and
verification, end of the day matters.
correct, and therefore uh, it is 2 to 3 days, which are, I mean, it's always going to be there. You can't have a within the day dispersal. That's not happening unless you start developing access to tokenized land records, tokenized homes, right?
Yeah, which is
So
what Finternet eventually is aiming at, right? Because you have an ecosystem in terms of the UPI. You also have the Aadhaar common
correct.
identity factor, which I believe is eventually going to lead up to this tokenization or digitization of the land records. I believe that should be immensely helpful.
Correct. And it's not that Finternet is the first team that is working on this.
Yeah.
RBI Innovation Hub
Hmm.
already has a small pilot going where they have made access to farmland records to
Okay.
banks,
Hmm.
right?
Hmm.
Specifically for the Kisan credit card. In fact,
Hmm.
they had showcased this as well, right?
Hmm.
But this is available to only a select few banks at this point of time,
Hmm.
right? You have ULI also coming in,
Hmm.
okay, and it would be interesting to see how that shapes up as well,
Yeah.
right? What I would like to see, all of these different initiatives do is come together to create some kind of interoperability, and that
Yeah.
is what also is one aspect of internet
Yeah.
where they are also working on making things interoperable across different networks.
Absolutely. That's interesting. Yeah. So as you mentioned, yeah, you're into this home finance, home loans space, and one of the key areas is private sector lending. And I'm sure
Yeah.
Finternet and the kind of digitization journeys you are walking through, going through, and probably leapfrog eventually is going to help. And how is it going to help the PSL, the private sector lending space?
So, so one of the challenges that most banks have is that each of these banks have large enough PSL quotas to meet,
Yeah.
right? The regulator has given most of these banks large enough priority sector lending quotas that look, if you are going to operate, then you
Hmm.
need to ensure that at least this amount of funds are gone into the sectors that the regulator wants to see develop.
Hmm.
And this is where what banks are doing is, instead of growing organically, they are also doing a lot of uh, portfolio buyouts.
Hmm.
Okay. And they're also working with co-lending models where they can quickly scale up their PSL quotas,
Hmm. Hmm.
right? This is where you need to do a lot more transactions,
Yeah.
and that's, I think, one area where Finternet can really shine,
Hmm.
because every time I have to do a transaction, it is a 2 to 3 month delay,
Yeah.
right?
Hmm.
Let's say I'm a bank and I'm running behind on my PSL quota, then using faster tech, I can look at a future where suddenly I can quickly ramp up my PSL,
Hmm.
right?
Yeah.
And after my quota has been made, then I can even offload it somewhere else.
Hmm. Yeah.
Okay,
Correct.
so it can become. I mean, this is in the distant future, not in the
Yeah.
near future, but at one point of time, I actually believe that it will become a you know. Matter of just managing my capital across multiple portfolio assets using a very, very transparent and
A very secure
interoperable
system.
network.
Absolutely. Yeah. Yeah. So the current
Correct.
challenges, right? And typically when you talk about mortgage and credit space are about these pre-dispersal or post-dispersal challenges, right? So where do you think is
Hmm,
is is
hmm.
Finternet going to address this, and what kind of initiatives are being done with the Finternet to maybe even break this problem down and get on to solutions?
Okay. So I'll take the pre-dispersal first. Pre-dispersal challenges would typically mean, ensuring all the details are made available to the lender before the customer gets the funds,
Yeah.
right? This pretty much means that do you have an escrow in place? Do you have all the data that is shared
Hmm.
for both the lenders to take a call on the loan? Uh, so in co-lending, there are two different models. One is CLM1, one is CLM2.
Hmm.
CLM1 is available for banks, and usually banks prefer CLM1, uh, where the junior lender is essentially disburse the funds, and then the bank comes and assesses it, and then gives the funds back to the junior lender,
Hmm.
right? In such cases, if the data that is being shared to the bank is not correct, or is not complete,
Yeah.
or is not in the format that the bank desires,
Yeah.
then you end up getting into a situation where the junior lender or the bank are caught on the wrong foot, right?
Yeah.
Because the user has received the funds, but either the junior lender or the senior lender has to take a call, and again that creates a lot of friction, right?
Yeah.
Similarly, there is a practice in affordable housing which is OTC disbursed,
Yeah.
where you are essentially waiting for a few documents,
Yeah.
and
then
those
literally
documents,
across the counter, you can actually disburse.
correct, correct. In such cases, it becomes even more challenging to operate in the CLM1 model, right? Because broadly, the senior lender essentially has to rely on the junior lender to close all those gaps. And over a period of time, as your portfolio scales, you will notice a series of pending documents that has to be collected, PDDs.
Yeah, yeah.
Right? And this is one major challenge that needs to be solved, right? Sharing document information based on standardized formats, right, will at least address a simple gap that the senior lender will able to take a clear call that whether they want to go ahead with this or not.
Yeah. Yeah.
Instead of saying that I am waiting, I'm trusting, right? You can operate in a near zero trust scenario, right?
Yeah.
And kind of automate most of these decisions using rule-based engines,
Yeah.
right?
Yeah.
Similarly, in post-disbursal scenarios, one of the largest problems is payouts.
Yeah.
Okay. So typically, when the customer pays you a certain amount, right? Now, this amount has to be divided into two portions, one for the junior lender, one for the senior lender, right? Now, depending on the repayment schedules, depending on the interest accrual formats, okay, this calculation can become very tedious. Let's say the customer is doing a partial payment of the EMI, right? Who will receive that amount? How is the loan appropriation going to happen? Now, if both the lenders are not agreeing with a certain loan appropriation format, do I first receive EMI? Do I first receive principal? Do I first receive charges? It becomes a very, very messy situation. Usually, what senior lenders tend to do is at the end of the month when they receive the funds, they will typically do a small exercise of, doing the difference checks for every loan account and then literally writing off that amount.
Wow. Okay.
Okay. It could be 5 bips, it could be 10 bips, but that 5 bips to 10 bips per month adds up.
Yeah, it's big chunk. Yeah, of course. Yeah.
And it ends up becoming a point of discussion. Most co-lending teams are not really enthusiastic to do a large portfolio because of this reason, right? And
each decimal makes a difference, right?
correct. And literally for 5 to 10 bips or 15 bips, people will fight.
Yeah.
Right.
So is solution coming in terms of the Finternet? Will that really make life a lot more easier, not just for the customer or the clients, but even you guys, as lenders or co-lenders, eventually?
So Finternet is providing us rails for solving this issue, right? What we are doing at Homeville is we are writing the logic for using this rails so that these issues are solved.
Yeah. Okay.
Right. So what Finternet provides us with is access to automated payouts, access to smart contracts where if the funds are correctly appropriated, then the payouts to both the lenders can happen as per the application logic that we have defined.
Okay. So basically it sets the framework or the guardrails, and then it's up for the respective lenders to work something in between and, and kind of make sure it's within the, the defined rules of that particular company. That's interesting. Yeah, absolutely. Yeah. So as we wind up, one last question, Prasad, for you. Where do you see this journey heading in terms of timelines? And, and I know it's not an easy one. It's a long journey, but definitely something to look forward to, where where technology coming together, Finternet coming together, and it's not about just India, right? We're looking at it at a global
Correct.
level. So where does this journey fit in your lens that you've been seeing and been working with them?
So I mean, there are multiple arcs that we have been looking at.
Hmm.
If I just look at the Indian diaspora, then I see faster access to credit for the smaller base tier NBFCs
Yeah.
as one clear win-win solution for Finternet,
Hmm.
right? The minute we look towards globally, suddenly you have the possibilities of creating a loan marketplace, a global loan marketplace, right? You also have the possibility of creating securities
Yeah.
where each of these loans can be sold as individual securities to investors.
Yeah.
The minute we open that up, then you could also look at you know creating this as a additional investment product.
Yeah.
And then uh, so in India, I don't know whether we have strips or not, but in Singapore there is a product called as strips,
Hmm.
where the individual component of the principal and interest can be sold separately,
Yeah. Hmm.
right?
Yeah.
So suddenly, the minute we link this with global money markets,
Yeah.
you have a lot of interesting products that can be created.
Yeah. Which is the interesting part. Absolutely.
Yeah, which will, and I see that in the long run, this will really help the housing ecosystem, because uh, companies who need access to credit will get access to credit, cheaper credit.
Hmm.
This will trickle down to the end users. They'll get access to, cheaper loan rates,
Yeah.
right?
Absolutely.
And this is something that, excites me, that if we can see through this entire implementation and execution,
Hmm.
then there is a lot of things that can be done on top of this. It's not just a liability product. You are also creating an asset product out of that.
Wonderful. Yeah, absolutely. Fully agree with you. In spite of all the the challenges, what the beauty of this Finternet is the kind of immense potential that it has, and the kind of ecosystem that this is building, not just in India but globally, and aptly led by Siddharth Shetty. I think Finternet is going to be the buzzword. It's already one, and this
Yeah,
initiative from the Sound of Money podcast is basically to create that level of awareness. We're going to have a lot more collab episodes with the Finternet team. But once again, Prasad, thank you so much for being on this podcast, Sound of Money, to to deep dive onto this credit space, the mortgage space, and where is it that Finternet will come in and make a huge difference to the kind of manual Excel sheets that you guys and your teams must have been struggling on. Thank you once again.
thank you, Santosh.
And well, with that, we come to the end of this episode of The Sound of Money from me, Santosh Sirur, and my guest, Prasad Ajinkya. Thank you once again for joining on this podcast. Bye-bye and take care.